Hello and welcome back to PKF Hotel Experts in Conversation With. Today I say servus to Vienna, servus to Stefan Catic. How are you?
Hi, Nils. I'm good, sitting in Vienna in our office. Maybe you heard that things changed a bit in the last weeks in Austria and especially in Vienna, but the situation is calm and fall is coming.
Well, hopefully that will change for the better very, very soon, because I was really looking forward to coming to Vienna at the end of the year, but unfortunately that won't happen. But early next year, hopefully I'll make it to see the team again, because being so far away in Cape Town, one does feel a little bit, I don't know, is it homesick? Stefan, I would like to talk to you today about operator search. Operator search is one of the mainstays of our product offering. You are the head of operator search at PKF Hotel Experts. Why would I, as an owner of a hotel, as a developer of a hotel, engage PKF Hotel Experts and talk to you about operator search? What do you do for me?
Well, I think most of the people also partially truly think that finding a tenant or a partner can be done on their own. So yes, if I'm having a couple of flats, it's easily to find someone who will rent it. And I think that it is true that more or less every businessman or woman will be able to find someone on her or his own. But the question is if the deal is a good one and if this product is sellable on the market on long term. So do I lose maybe a value? So let's start first with lease agreements, maybe, which we do most in the DACH region. We at PKF Hotel Experts know which location, which product qualifies for what lease level. So as we're running 40 to 50 operator searches each year globally, we know if something is maybe too high or too low, the lease. So if the operator can pay it on long term, if it's too high, or if it's too low, you lose the property value, pretty easily saying. Then there are the small stuff, which are some kind of terms and conditions, which if it would be your first or second or third hotel, owners would not know that they are very, very important if it comes to selling the property in 5-10 years, or maybe as a forward deal. I think this is where we make this added value. I mean, one very good example for me was a deal we did for one of our good clients, where the added value was around 20-25 million for a property worth now 90 million. So we're talking about a really, really big thing. This is the small stuff we say, this is the reason why you need a consultant and why we are good at it. If you look at management agreements, the thing is even more difficult because you normally, it's easy again to receive an LOI from a large group like Marriott or Accor or Hyatt, but the question is, can't I get more out of it? And again, our team knows exactly what is the base fee, incentive fee, how an agreement can be structured that it's owner friendly. I am not the biggest fan of agreements which are just leaning towards the owner. It should be a good mix, that both sides earn money. And if this is the case, then there is a good partnership can be established on long term.
Thank you. The last sentence you said is sort of the crux of it, where you say it needs to be balanced. People in the past felt it wasn't balanced enough. We now had the crisis, or have the crisis. Have things changed because of the crisis?
Well, it would be a lie to say no. Of course they changed. Again, I think we have to distinguish between different markets, different owner types. So if it's an owner who is a trader developer, they didn't change their opinion on the lease model, especially in the DACH region, leasing a property, selling it as a forward deal. The big question mark is now the exit yield. No one can predict how the exit yields will move. I mean, they will move towards 4, 5%, whatever, in which market, in which product quality, but they will develop positively, and now fluctuating pretty strong. Looking at owners who want to hold the hotel or the hospitality product, there it's different. They are willing to take more. I mean, they were initially also willing to take more risk, and now they're taking even more risk maybe, and accepting a higher ramp-up phase for 1, 2, 3 years, where there is a flexible payment model if it's a lease or management agreement. And then, but what we clearly see is that everyone says, okay, we stabilize in 2027, 2028, and the crisis must be over. So somewhen there must be a normal scenario where their owner also can make, hopefully, money as well as the operator.
Right. Now, if the situation were that you could choose, you could determine yourself. I mean, you negotiate on behalf of me as the owner, but you can't at this stage. You cannot choose. But if you could choose, what would you see as an area where you would like to see change? Where would you like to say, you know what, that's something which I'm not really too happy with the experience that I've got, with the deals that I pushed through for owners? What would be the couple of things that would make that relationship that we spoke of more level-headed, fairer, if that's the right word, more equitable for both parties? Because it is, at the end of the day, most, and in particular if we talk about HMAs, hotel management agreements, we talk about long-term relationships. I mean, those are supposed to last longer than most marriages last. We're talking about between 15 and 25, 30 years. What would you like to see change?
So, starting maybe with management agreements, I completely agree with you. The marriage is most likely shorter than 20 years, looking at current developments. I would say that operators should be willing to take a little bit more risk and to take the liability for their forecasts. What we saw in the past years, and I mean, I would say even now, you receive a forecast which is maybe too shiny. You think like, oh, I will make a lot of money, and then the hotel opens and the rates and the occupancies are not achievable. I mean, a management agreement is of course more riskier, and the projects are mostly also, let's say, more risky as themselves, because they develop as resorts or as nice luxury hotels. But I truly believe that operators should at least take a little bit of the risk in terms of an owner's priority. I'm not talking about hard guarantees, and an incentive fee which is stepping up. So if you can't perform, it's okay. It can happen, but then there must be a downside. It cannot be that the operator earns money while the owner is bleeding. On the other hand, I don't want to bash the operators, because I think also that owners are sometimes difficult, and talking about large institutional investors and their investment strategy. So I truly believe that this old fixed lease model with no variable lease, 12 months, 18 months bank guarantee, corporate guarantees, all this stuff, it's very difficult for the operator too. So for the lessee, because I mean, they pay a high lease, and if it's in good and bad times. And I truly believe that here owners need to tend more a little bit to try to be more operator friendly, to make it possible to them to earn money on long term, and to establish this partnership. In good times, it's better for everyone. In bad times, you have to try to find a solution. So I think that there is both. I mean, operators and owners need to change a bit.
Yeah, coming back to that balance, as you put it. The lease model, of course, in the continent that I work in Africa is very rare. There are some markets where it happens, but most of them are hotel management agreements. And there, I think there are a few lessons to be learned. There are a few opportunities for us as consultants to assist owners and to make sure that that balance is given, and that they also know what they let themselves in for. And that leads me to the precursor of the of operator search, which is our feasibility studies, where we see, is it viable to build that particular idea that the owner may have? Because a lot of markets that I'm in touch with, Middle East and Africa, you often have what I call the desire for return on ego rather than the return on investment, and where we need to guide the owners to say, look, a 5-star luxury hotel in a secondary or tertiary destination is not really the thing to do. And then when we do that, you would not be able to get the brand to actually talk to that owner to open a hotel of that standing.
Yeah, true.
Yeah, it really is. I think it's a very important part, and I think most owners would be well served to engage, preferably ourselves, but also any of our competitors to help them to get the right deal across there and not do it themselves, which is of course always the clash between the brands that also go out and try to find their own deals and cut the deals straight themselves without advisors there, which we speak on behalf of the owners, so we do that. Stefan, I know you're a busy man rushing off to the next meeting. Thank you so much for your time. I really appreciate it.
Thank you for inviting me.
Kind regards to Vienna. Say hello to the team for me, and we speak very, very soon. Thank you, Stefan Catic, Operator Search Head.
Bye, Nils.
Thank you. Bye-bye.